Hello everyone, I'm Mike and I'm a Director in Corporate Reputation at Ipsos, where I lead our financial services work. I'm here to talk about trust in the banking sector and outline the areas in which the sector has made progress in recent years. Starting with a global snapshot of trust in the banking industry, we can see that compared to a number of other high-profile industries, the sector is relatively well positioned, and with almost half the public undecided on the subject, there's a clear opportunity for the sector to improve further. Nevertheless, it must be noted that the sector is in an overall trust deficit, with more of the public finding it untrustworthy than trustworthy. What is most encouraging for the banking industry, however, is not its position relative to others, but rather its overall direction of travel. Here we can see trust in the banking sector between the years 2019 and 2021, with an 18 percentage point increase in net trustworthiness over that 2-year period. Encouraging for the sector, this is the single largest increase of any industry measured on the study, with only pharmaceuticals and oil and gas having seen similar levels of improvement, albeit not quite to the same extent as banking. In the case of the pharmaceutical industry, clearly the COVID-19 pandemic has been its opportunity to show its value to society, while the oil and gas industry's role in helping transition to a greener future has put the industry in the public's attention. In the case of banking, however, the drivers of improvement are much more nuanced and less attached to a single issue, such as the other industries mentioned. Looking now at different attributes that form the drivers of trust in banking, we can see that the sector's strongest agreement is on being seen to be good at what it does. For banking in particular, this is key, as in the absence of basic trust, there's no foundation on which to communicate a more holistic purpose and build reputation. This is why service outages, data leaks, and IT failures can have such significant impacts on reputations in the sector. Crucially, we also see a good level of agreement that the sector performed well during the pandemic. And from our wider research, we know that this has become a key touchstone for many stakeholder groups when assessing the sector's reputation. With the contribution to society that banks demonstrated during the pandemic, having helped the sector further move on from the financial crisis of 2007 and 2008. However, in order to fully understand improvements in overall trust, again, we have to look at direction of travel. Here we can see that between 2019 and 2021, the sector has improved ratings across all drivers of trust. Crucially for the sector, the attributes where it has improved the most, behaving responsibly, keeping promises, having good intentions, and being transparent, are also the drivers that we know through statistical analysis have the greatest impact in driving trust for the sector. This means that improved performance on these attributes in particular will have a greater impact on trust than improvements on other attributes. So the sector has improved across a range of important areas, and this is driving improved trust more so than any single issue. The pattern of improving trust is not limited to the public and can also be seen across influential audiences such as politicians and journalists. Here we have data from our UK MP study, which shows favourable views having steadily increased for a number of years, but that we're now starting to see signs of that positivity softening. The same can also be seen for UK business journalists, albeit starting from a more negative position overall. Again, favourable views steadily increased from 2021 and then started to tail away. With more informed audiences such as MPs and journalists, often a bellwether for what is to come for the sector, it may be a sign that with issues such as the cost of living crisis, potential loan defaults, and increased scrutiny of fossil fuel financing, there may be some difficult months ahead. So in closing, while the global trustworthiness data tells a positive story for the sector and highlights the areas to focus on to drive further improvement, the sector's reputation does remain vulnerable. Despite improvements seen in recent years, 50% of the global public feel the sector would take advantage of them if they could. This skepticism remains a challenge and will be the filter through which the sector's handling of issues such as interest rate changes and loan defaults will be viewed. Similarly, it should be acknowledged that in many parts of the world, low trust towards the sector remains. And here we've highlighted that major European markets are particularly challenging. And finally, that inflation and the cost of living crisis is becoming the key issue for your consumers as COVID recedes and the impact of rising prices is starting to hit household budgets. Much like you were during COVID, the sector will be expected to support the most vulnerable, and stakeholders will again be paying close attention to how this issue is handled. Thank you for watching, and to discuss any of the insights shared in this video, please get in touch.